Welcome to this video on S-Corp advantages, a good way to keep more of your profits. In this video, talk about FICA savings, how you can handle health insurance, and a way to further reduce federal taxes. So let's look. FICA savings. FICA is the payroll taxes you pay on earned income. They are split between Social Security and Medicare. You pay 6.2% on earned income, up to $184,500 in 2026. And you pay 1.45 on all earned income. And there's an additional 0.9% for high earners, which is 200 and over. So given this, you want to keep your earned income as low as possible. And those numbers are actually doubled as both the employee and employer pay the same amount for a total of 15.3%. So you start by paying yourself what they call a reasonable compensation. And there are no rules on how to calculate what is reasonable, so you just have to do some research for the field that you're in. But basically, you split profits between your earned income and passive income. So if you had all of your income from your company like that, then you would declare some of it as your salary, which would be earned income, and the rest would become passive income. And you only pay FICA on the earned income part. So that means you can have a 15.3% savings on the passive income. So let's look at an example. Let's pretend you own a business and you made a profit of $100,000. And we're going to look at sole proprietor and as an S-Corp. And we're going to calculate the taxes and after-tax income in both cases. So when you're a sole proprietor like that, you have technically a salary used to calculate your FICA. And that would work out to $7,065 for both the employer and employee, which would give you an adjusted gross income of $92,935, which would be the 100 minus the employer part to the 7,065. On the S-Corp side, we have the exact same 100,000, but let's just say we declared a salary of 40,000. That would mean our FICA, employer and employee, would be reduced to 3,060, which is a $4,005 savings times 2. That would mean an AGI of 96. That's higher because you have less of a business deduction for the FICA employer part. Let's see what happens. If you're filing single, then you get the deduction of $16,100, the standard deduction for single person in 2026. Then you've got something which is called a qualified business income deduction. And QBI is calculated as 20% of the lower of your company income and your income as a person after the standard deduction. So in the sole proprietor scenario, the lower is the taxable income because in fact this all together. So at 92,935 minus 16,100 gives a base for the calculation of the QBI at 76,835, and 20% of that is the 15,000. In the S-Corp scenario, the lower is the business income, which is 100,000 minus the 40,000 wages minus the 3,060 FICA employer portion. And that gives 56,940, and 20% of that is your 11,388. So that means that your taxable income for you as a person is higher in the S-Corp than it is at the sole proprietor. Well, and of course that means you have a higher tax, but you'll see the taxable income, which is what you're really trying to increase, actually does increase by over $6,000 because you've saved $8,000 on FICA. You have to give back $1,756 on the increased tax, but overall you're a winner. So that after-tax number, where did that come from? It comes from the money that came in, the 100,000, and then you subtract all of your actual costs, which is the FICA times 2 and the tax. The deduction, the QBI, and all that, those are just ways to calculate those numbers. But you've gained over $6,000 by doing this. Let's look at if we happen to file jointly. In this case, all the numbers up to this point are exactly the same, but we have a higher standard deduction, 32.2. This does impact the QBI on the sole proprietor side because you have the increased standard deduction, which decreases the business income, as it were, and then gives 20% of that is obviously a lower number. On the S-Corp, it doesn't change because it's the business portion is still lower than your personal portion. Gives a taxable income, still higher on the S-Corp. Tax, much closer this time, but still higher on the S-Corp. And now you have a taxable income over 7,000 higher. So in both cases, it works out. Let's look at what happens if the profit is 200,000. So go through this a little bit quicker, but we have a profit 200,000, gives our salary of 184,700, 14,000 each of the FICA, giving 185. You've actually reached the Social Security limit of the cap, which is 184,500 in 2026. The S-Corp, same 200,000. Let's just say we doubled our salary, in this case, 80,000. That gives us FICA of 6120. So we're saving $8,000 times 2. And we have an AGI, which is obviously $8,000 higher in this case. So if we're filing single, same standard deduction, QBI, big difference as we saw before. Taxable income, quite a difference, almost $20,000. The tax, 4,600 more, but the number we're really interested in, our after-tax income, is $10,000 higher. So we can see that as the amount goes up and we're able to push more and more money into the passive income, our savings increase. Filing jointly, you have the same increased deduction, QBI is still different, taxable income, almost $16,000 higher, bigger tax bill, but still, in this case, a little bit more, 11,000 after-tax income. So let's look at those in a different way. We're going to compare the two. So on our sole proprietor, we have $28,000 of FICA versus $12,200 S-Corp. We've got $25,000 in tax sole. We've got $29,000, but you can see that it's still lower in total, the sum of the two, which means in one case, we have $146,000 of your money to get to keep versus $157,000. So that shows you that you take home more money. Another thing we can look at is health insurance. You can pay or reimburse your health insurance premiums via the S-Corp. So as always, ensure your total compensation is reasonable. And this part only works if you do not have access to an employer-sponsored health plan. Even if you choose not to use it, if it's offered to you, then you can't do this. And this includes your spouse if you're married. So if you could get access to it, then you can't do this, what we're about to do. But if your S-Corp either pays directly or reimburses you for the health insurance premiums, you can deduct 100% of those premiums and still take the standard deduction. Not only that, you can further reduce the FICA tax. Health insurance can be part of your compensation and be removed from the amount subject to FICA. So how do you do that on your W-2? Your typical one, without doing this, you'd have your 80,000 all subject to Social Security and Medicare with the taxes calculated. But if you use this strategy, then you are saying that part of that, included in that compensation of 80,000, there's $6,000 of health insurance reimbursement. which means that your Social Security wages go down to 74 and your Social Security tax also decreases. Medicare decreases and your Medicare tax decreases. And it's a good practice to put in this box 14 an explanation for why those two numbers are different. HI is a good abbreviation for health insurance, and it tells you the amount of it. So the savings turn out to be that there's a difference of 459 in the Social Security and Medicare, and you actually get double that. So the total savings are $918 just by reduction in what's subject to FICA. And in addition to that, the $6,000 health insurance is also a deduction at the personal level, even without itemizing. So let's look at that in numbers. And here we're going to compare simply paying health insurance out of pocket, you don't get to deduct it, versus having it on your W-2, which does allow a deduction. So set this up. On the left, you being an S-Corp, but not paying for the health insurance. So you have on the S-Corp side, 200,000, got a wage cost of 80,000. It's paying the employer portion of FICA, 113,880, which then passes along to you as income on your K1. You report your W-2 of 80,000 and the FICA of 6120, but that doesn't really count in your AGI. Versus on the health insurance side, the S-Corp pays less FICA, so the K1 number is higher at 114. You still get the 80,000 and you have that, but then you get your standard deduction, the QBI, and you get to deduct the health insurance premium. So that comes out before your tax is calculated, meaning that you have a taxable income, which is $5,633 lower in this case. And that gives you a tax, which is $1,352 less. So combined, you have a $2,220 gain by doing this. And that's more than a third of your $6,000 health insurance premium. So I think that's pretty good. So looking at that graphically, what we did before, just being a S sole prop going to an S Corp, we did, and this is for the single again. Now, adding in the strategy of paying yourself the health insurance, we see that our FICA goes down, our taxes go down, and therefore the money we get to keep went up. So now we're keeping 160,000 of our 200,000. Another thing you can do, if you choose a high deductible plan, you have the option of contributing to a health savings account, an HSA. And these are actually really great if you can. The contributions are pre-tax, and if spent on approved items or services, anything that's medical, and there's actually quite a lot of things you can spend it on, it's also tax-free when you spend it. So it's like a 401k or an IRA where you don't pay tax on the money that goes in, and then it magically turns into a Roth, and then you don't pay money when you spend it. So for 2026, the amount that you can put into this HSA is $4,400 for an individual and $8,750 for families. And if you happen to be 55 or older, each person can contribute an extra $1,000. So if you're married and there are two of you, you can put 1,000 in and your spouse can also put 1,000 in. Just be careful. This does require each of you having your own separate HSA accounts. You and them will have to put 1,000 in their own accounts. And then you're free to split the 8,750 however you want between the two accounts. You can put one at 9,750 and one at 1,000 or anywhere in between. And this contribution can be a benefit included in your W-2. That means it can also be excluded from FICA, which is where big savings also come in. So let's look at the W-2 in this case. This is comparing to the W-2 where we've done none of it, the first one we just saw. Then, if you look at, if we have the S-Corp pay the health insurance premiums, in this case, estimated $5,000 or $6,000 a year, total compensation is still 80, but we've also added in the 4,400 of HSA contribution. So now our box 3 goes down from 80 to 69,600, and our Social Security goes down also. The Medicare goes down to that same number, and our Medicare tax also decreases. And so here now we're explaining why it's $10,400 less, because $6,000 for health insurance premiums, and that number could be higher these days. And you've got HSA of 4,400. So that's a difference of 796 in savings on Social Security and Medicare, which times 2 gives you a savings of 1,592 in this particular example. So let's look at this in numbers again versus the no insurance and then the combined having both of them together. So the difference at this point is that we see that we've saved our 796 on the FICA, and that's times 2. Then we've got our standard deduction, our QBI, which is fairly similar in this particular way. Then you get to deduct 10,400, which is the health insurance premiums and the HSA contribution, making your taxable income almost $10,000 lower, which of course means your tax is lower, and your after-tax number now is increased by almost $4,000. So that's almost 2/3 of your $6,000. Of course, you are contributing money to your HSA, and so you don't have that cash directly, but you can put it in and use it right away if you need it on approved items. But the other nice thing about the HSA is that these funds could be invested and grow tax-free as long as the money is eventually spent on HSA approved items or services. And you'll still have expenses during this time. You can pay for those things out of pocket if you're able to. You keep track of them, and then you can pay yourself back tax-free later. And later can be years, or actually there's no limit to how much later it can be. So that money can grow and grow and grow, and then you're paying yourself back for stuff that you spent on approved items since you opened the account. Looking at that in our graph here, we've got our progression from sole proprietor to simple S-Corp to S-Corp with health insurance. Now, adding in the HSA, we'll see that our FICA is reduced to 10,000, so it's smaller. Our taxes are smaller, and that, of course, means that the money we get to keep has gone up even more to $161,897. This last thing, tax savings. In some states, well, this applies to states where you can pay the state tax via the S-Corp. Obviously, this only applies if you live in a state that has a state income tax, and then this might work for you. It's definitely worth looking into. Because if you're not itemizing, you can't take advantage of deducting your state taxes from your federal income. And you may not be able to deduct the full amount if there's a limitation with the tax law. So some states allow the entity to pay its share of the tax directly and give you a credit for that same amount on your personal taxes. So your total state taxes do not change, but you do get a discount on the federal tax because your taxable amount is lower. Your K-1 will include the state tax payment as a deduction, so it won't be taxed at the federal level. And then when you report at the state level, you need to add that number back in to report your income to the state, but you receive this offsetting credit, and that goes on your personal taxes. So it doesn't hurt you in any way to pay these taxes. Just you're paying them from a different source. So let's look at the numbers in this case. So pass-through entity tax, that's what the PTET is. So say you have the 200,000, you've got 80,000. I mean, on the left, that's what we've seen. It's our standard. Over on the right, and here we're not doing the health insurance, we're just looking at the effect of the PTET. You can see that there's an extra expense for this tax. So the rate of the tax, of course, is going to depend on what state you are being taxed in. In this case, I have a 5.75 tax rate applied. And often, even if the state has a progressive tax rate system, it will be the S-Corp will be taxed at the highest one, which actually works out in your favor because that means you get a higher deduction on your federal taxes. So AGI in this case has gone down by, of course, the amount of that pass-through entity tax paid. Get you still same standard deduction. QBI is affected, we can see, because the S-Corp has less profit, so you get less of a qualified business income deduction. So our taxable income still is down, which means our tax goes down. And our after-tax money is higher in this case by about $1,257. So how was that calculated? It's basically the amount that you're saving, the decrease in taxable income times your marginal rate, so the highest rate that you're in. But due to the QBI thing, you're really saving the marginal rate times 80% of the PTET's amount. And that's how you get that. So 6548 times 80% becomes 5238. And then in this case, it would be 24%. That gives you your 1257. So let's look at that progression. And here, we're cumulatively adding each of these strategies together to see the total cumulative effect. So here we've got everything together. We have sole proprietor, then we had the S-Corp, then we had health insurance, then we had HSA. And then on top of that, now we've added the PTET. So PTET does not change FICA at all, as we can see. It doesn't have any impact on that. That's the same. But what it does do is it does decrease your federal tax. And that means you keep more money for yourself. In this case, we've got it up to $163,000 when we were starting at $146,000 without implementing any of these strategies. So there we go. I hope this was helpful. Thanks for watching.